Assalamu alaikum. Good morning, everyone. My name is Imreen Ali. I'm the Company Secretary of Pakistan State Oils. I hope I'm audible to everybody. On behalf of PSO, we welcome you to our corporate briefing session for the period ended 31st March 2026. We will begin with recitation of a few verses from the Holy Quran. Then
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر صدق الله العظيم.
Jazakallah. We have joining us from the management team, our Chief Executive Officer, Mr. Jawad Chima Saab, is with us online. We also have with us the Chief Financial Officer, Ms. Gulzar Khoja, General Manager, Compliance and Reporting, Mr. Tariq Hussain, Deputy General Manager, Financial Reporting, Mr. Zubair Qureshi, and other members from the management. We would request all participants to please keep themselves on mute because we have a dedicated section for question and answers after the presentation. We will now begin our presentation.
Assalamu alaikum everyone. Welcome to the corporate briefing session for the period ended March 31, 2026. Hello. So, as you all know, this is our company profile. Pakistan State Oil is serving the nation as an innovative dynamic energy company, and we're the biggest oil marketing company in the country. We have around over 3,600 retail outlets spread all across Pakistan. We have 37 company-operated retail outlets. All across Pakistan, we have 10 installations, 18 depots, 15 aviation stations. Our total storage capacity is 1.2 million tons, which is also the largest in the country. We have 2 lubricant manufacturing facilities with a single shift blending capacity of 70,000 metric tons per annum. We are ISO certified. We have ISO certified mobile quality testing units, which to ensure that the quality of the products supplied by PSO is of highest standard. We operate and offer tech-oriented card network across Pakistan. Our non-fuel retail facilities include white stores, shop stops, ATMs, oil change facilities, car wash, and quick service restaurants in various retail outlets across Pakistan. As far as the sustainability and growth is concerned, we source our product through, our first priority is to source our product through the local refineries, and whatever we cannot source, we then import that. The storage and distribution network of 1.2 million metric tons, as I mentioned earlier, is connected by a pipeline and a fleet of lorries which run across Pakistan to transport our product. Our aim is, of course, to ensure that all our customers are satisfied and they have confidence in our products. We are meeting our customer demands through multiple channels, including retail, high street, B2B, and all other channels that are required to market our product. This is a group of network of different companies that we have. So we have PRL. We have approximately 64% shares in PRL. Then we have 100% shares in Charisma, PSO RE, and PSO Venture Capital. Then we have 49% share in Aisha Petroleum Limited, 22% in Park Breeze. In BAPCO, we have 12%, Jimco, we have 62%, and the new Islamabad International Airport, we have 50% share. This is our line of products and the services that we offer. So it's all across, like all grades of fuel. We have gas offerings as well, cards, and non-fuel retail, and of course, our prime product is lubricants. Our major customers are these, but these are not, of course, this is not an exhaustive list, but we have Sui Northern, Total Energies, Pakistan International Airlines, Pakistan Railways, Pakistan Navy, Sinosin, Air Blue, NLC, FWO, and Flyjet. As far as the key business risks are concerned, of course, in the current times, the most prominent and the most obvious risk is the price volatility, which we have to very meticulously manage to ensure that the company is not exposed to a lot of risk. However, a lot of factors are not under our control, so the risk always stays. As you know, the company has been facing liquidity risks in the past many years, 5 to 7 years, and this risk is not going away. We have been able to receive some money from our circular debt amount. However, this stays as a big issue, and we manage it on a day-to-day basis. The macroeconomic instability also kind of impacts us directly because fuel consumption is in direct relation with the macroeconomic indicators of the country. Recently, supply chain disruption because of the close of Strait of Hormuz has been one of the major risks again that the company has been managing. Mashallah, we have been able to ensure that our supply chain remains wet. We have been able to supply oil across the country without any shortages or any other disruptions. The risk that is associated with the liquidity risk is a high cost of finance that increases with the increase in the cost of doing our business, and that is the biggest risk that we have been managing. And of course, the new upcoming risk is the energy transition to the alternate sources. We have entered the renewables game as well, as you can see in our accounts, and we will be there substituting the sources of energy as the nation moves. Some of the supply chain improvements for the 9 months that we are discussing right now, that we have commissioned 71 new retail outlets. Like I mentioned earlier, we have been able to keep the supply chain wet amid the disruption of Strait of Hormuz. There was a force majeure from KPC, there was a force majeure from Kuwait Energy, but the company's management is committed to ensure that the supply doesn't get disrupted, and we have been able to successfully manage that. These are a few awards that the company has bagged during the 9 months. So you can see that we've done awards in all kind of segments. Our technology and innovation, of course, we can't leave behind that. So PSO has become the first OMC to roll out a dual interface card nationwide. As a part of commitment to sustainable mobility, I have just mentioned that we have also moved to the renewable energy and to green energy. So EV charging stations are being added as we speak. Some of our CSR activities, which I feel very happy about, is that we've spent around 394 million in our CSR to giving money to our CSR Trust, who then funds a lot of projects for economic stability, health, education, and all the social welfare needs of the country in different regions. This is one of the pictures of one of the children's play area that we started at LRBT. And the other photo is of the bionic arms and the limbs that we donate. We work with them, and this is just a celebration for that. Coming to the brass tacks, this is how the oil market has behaved. As you can see, in February 2026, end 28th of February, there was a spike. The Iran war had started and the spike had started. The oil prices started to increase. This is the price of the crude price. The refined price was even higher, much higher than this. The crude price, the highest price that we achieved, that was reached was in April, I think 7th or 8th of April, and it was around 144. per metric ton. It is now, with the peace agreement going on, it is now settling down. Today, I think it is around $78, but it is highly volatile depending on how the agreements pan out and how the geopolitical situation develops. So I can just tell you what the history is. Future is very difficult predicting at this point in time. As far as financial performance is concerned, since this is up to March, we had significant inventory gains in March, and that's why our profit is showing a very healthy trend. Uh, like I mentioned, that the prices spiked in February and March. In up to mid-April, they were pretty high, and after mid-April, they have started to settle down a bit. So we may correct all the gains that we've made. Maybe we may lose all the gains, or depending how the situation pans out, this would impact. If I just highlight what happened in the 9 months, so our revenues have been 2.2 trillion, and our admin costs have been 21 billion. All other numbers are, I think, quite explanatory, self-explanatory, and we ended up with EPS of 81.19 rupees per share. Our balance sheet remains healthy. The only big difference that you can see in the balance sheet as of June 30th and as of March 31st is the increase in the value of inventory. The quantities have reduced, but since the value of inventory increased substantially, you can see that it has increased from 250 billion to 400 billion, which may answer a lot of your questions. Accordingly, there was a small increase in the trade debts as well, and the rest of that remains pretty stable. So the only unusual activity here was for inventories. Similarly, as a corresponding number, the trade and other payables increased from 383 to 502 billion. The rest of them remains kind of stable. Our borrowings were at 288 billion, but they have increased after that. It is just a matter of, balance sheet, a snapshot view of that day. Maybe if you ask me of what happened on 1st of April, then the situation would have been different. As far as our segments are concerned, the petroleum products revenues were 1.6 billion, LNG was 1.6 trillion, LNG was 566 billion, and others were around 9 billion. The profit, we earned 43 billion from the petroleum products. LNG is a lost product because of the huge financial costs that we incur on doing the LNG business, because the trade debts mostly comprise of LNG related debts, and others have contributed around 1.7 billion. These are some key financial metrics. The company is healthy. The only dip in quick ratio is because of the high cost of inventory. The rest of it is showing very healthy trend, and this is also very healthy. So I have no problem in saying that the company remains stable throughout this testing times. Our group financial income was around, consolidated profits were around 40 billion. Although PRL had earned a profit of around 9 to 10 billion. However, since there was an accounting adjustment, the only increase that we can see over here is 764 billion. The rest is was adjusted in accounting. That's all from my side. I think I have a list of questions. Should we take 5 questions first? Okay, we can take 5 questions first, and then we can address the question that you sent on email.
We would request the participants to please use the raise hand feature on Zoom, and we will take your questions one by one. Please mention your full name and your institution or folio number before asking your question.
Assalamu alaikum. Am I audible?
Yes, you are.
This is Saibal Masood from Maple Leaf Capital. My first question is regarding inventory gains. So, in our estimation, the total inventory gain in the 9 months FY26 was around 62 billion. Can you verify that?
I cannot give you, I mean, I don't have the exact number with me right now, but you can see from our profit that has been a substantial increase, and yes, inventory gains are there. But I would request you not to focus on inventory gains because it's always a zero-sum game. So whatever we've gained
Yes.
will go back because the prices have increased and they'll come back, they'll come down. So I think I would leave it to there. It also depends on your average cost that was there at the particular period in time. It was really. And it
Definitely,
also
that makes sense. With, and This, I'll move to my next question. As an analyst, I do have to forecast quarterly earnings. I get your point that it's a zero net sum game, and eventually we should focus on the long term. But when we're doing quarterly forecasting, inventory gains do make a difference. So, if the prices go down by 20 to 30 rupees in the next two price revisions, my calculation is that inventory loss for this quarter will be around 21 billion. Am I close? Can you give us a hint about this?
uh, the problem is that whatever I say would not be valid at this point in time. It depends on that day, the price when the government changes the price. So there is a purchase difference because it depends on what the purchase day is and what was the applicable rate plats at that point in time, and when the government changes the price. So the ratio is very different. The government has changed the formula many times during this crisis just to help the nation and just to stand by the nation. So I really, whatever answer I give would not be valid. Look, you can calculate approximate numbers, but I really, as a CFO of this company, cannot give you a particular number or even give you an idea of how close or far you are from the number.
Okay. So the formula revision you mentioned, is it it's advantageous towards the nation, but it's disadvantageous towards OMCs, right?
It is their prerogative. They look at the situation. Sometimes the market is using the product and the product is short, so they help the dealers. But most of the time, it is definitely towards the end consumers. The government is very concerned with what are we charging to the end consumers and how can we benefit. So of course, the nation remains at the heart of all the decision making that they do.
Okay. So how is the pricing formula different from what it was before the war?
So as you can recall, initially it was changed fortnightly, then they moved to weekly, then they changed the formula for diesel to moving on to the crude price, then the Platts price, then they've changed again to the Platts price. So using which averages they're using. So there's been a lot of active management of this number, and I think that was right. Although I may not be very happy being PSO, but I think that was right decision by the government to manage the overall fuel situation and the fuel cost for the nation.
Okay. Okay. So moving on towards the next question. What is your strategy with regards to market share? There are competitors, especially some foreign players, which are giving discounts to gain market share.
Yes. Jawad, you may want to answer this one.
Sure, thank you. Our market share currently is hovering around 42 to 44%. What we feel is that that's a defendable market share. Discounting done by players is a norm that has taken shape in the last, I think, 2 or 3 years. Within PSO, we believe maintaining a healthy profitability and getting our balance right. So we are maintaining our market share, and the current plans include to see what we can do to enhance our market share and compete in the marketplace.
Okay, so you guys are preparing to compete and increase it over time.
Of course, we
Correct.
are. We have to stay alive.
Okay. So regarding OMC margins, there has been talk that the government might approve them in the next year, depending upon digitization. So what is the status of digitization? How serious is the government of about raising OMC margins?
I think PSO is leading the digitalization as we speak at the moment. So we have been very actively working with the government to meet their targets. We always are kind of a pallbearer or the example for the industry. So we are working towards it. We have started to install equipment required for digitalization, and we will, inshallah, have a good leap by December, and then follow the plan that the government has.
Okay. So moving towards the other income and expenses during the 9 months of FY26. Other income during the past 2 years, which was 23 and 24 and 25, it was 22 billion plus. However, the other income has declined during the first 9 months. Do you see it touching 40 billion in FY26?
Other income is a factor of a lot of things. It includes the profitability of our associates, and it includes one of the major driver is the policy rate that the government has. You would recall that the policy rate has risen to 22% in the past few years. So that is a direct kind of relation. The other income has a direct relation to that. The policy rate had reduced from 22% to an average of around 14% during the first 9 months, and it is further reduced to around 11.5% at the moment. So the return that we get on our line fill is a factor of that, which is a substantial portion of other income. Then also our overnight placements in a day or the placements that we have, that is also a factor. So we are trying to optimize the other income. However, it is dependent on the policy rate and also on the profit of our associates.
Okay. Okay. Also, other expenses were really high during March 26. What kind of provisions did you make?
Okay, two factors. One is, of course, the direct relation with the profit, that you may know. Other
Yes.
is that the government has become extremely prudent vis-a-vis our tax cases. And we have been also prudent in provisions of our tax liabilities and provided for wherever it was needed, wherever we see that we may not be able to successfully convince the government of our situation. So we've been prudent in our taxation. So there are two factors. One is, of course, the high profits, which increases the WWF and WPPF.
Yes.
And the other thing is tax provisions.
Tax provisions. And which is why your effective tax rate was also higher this time.
No, the tax rate is always high. If you, whatever year you can pick up, is basically for LNG, the company is taxed at 1% of the revenue. Whatever is an import cost, we have to pay 1%, and that is considered as the final settlement for that. That and volume-wise or amount-wise, LNG is a substantial factor. So that kind of and it is a loss-making business for us because most of the financial cost is attributed to LNG. So the higher rate of our effective tax is around 60, north of 60%, and that is mainly because of LNG. So our normal products are, of course, taxed at 39%, like any other corporate. However, because of LNG, the rate of tax returns increases.
So you have to take 1% of the gross sale of LNG.
Yes.
Import cost.
Import cost.
Import the entire import cost, not even accounting for like those minor losses that we incur. Okay. So what is the status of the power sector receivables, especially after the 1 trillion restructuring of debt that took place last year in 25 November?
So power sector receivables, PSO just has a 68 billion receivable from the Nandipur project, Genco 3. Rest of it does not belong to us. This is mainly because on the EP companies, exploration and production companies. Our power sector is 68 billion. We may be receiving some amount before the end of the year on that behalf. However, the rest of it does not belong to us. Our major receivable is from the LNG, SNGPL, and
Yes.
also on taxation and some other government receivables.
Miss, could you repeat? You said 68 billion, right?
Yes, that's a principal amount.
Principal amount. And roughly, how much would you be receiving by the end of this year? If you could just give us a ballpark number, 30%,
Around
50% of it,
around 10 billion.
around 10 billion. Okay. And what is the status of your major receivables from SNGP? In your last statement, you mentioned they're around 310 billion. Where do they stand by now, and where will they be by June 30th?
As of today, they are around 286 billion. So we've received a tranche of 25 billion from them. However, the government has made a plan for settlement of circular debt in its totality, and we are a part of that. That plan will materialize over the next 2 to 3 years. I mean, it will start, I think, after June, but it will materialize, it will complete in 2 to 3 years, and we are part of that. So this may be settled as well.
Miss, please excuse my request for repetition. You said 275 billion is pending from SNGP as of now.
Yes, 276, 286, sorry.
27
286.
Sorry? 286.
286.
Thank you. 25 billion has been cleared for it. Okay, and there's a 2 to 3 year plan in which you're part of it.
Yes.
Okay. And there was a news recently that you are restructuring around 100 billion of debt which you had from BOP and HBL. In the
No.
previous corporate briefings, you have been kind enough to tell us that the finance cost for our ease, you said it's 50 to 60% of KIBOR. After the restructuring, does it stay the same?
No, it will not. But this is just financing the current increase in the inventory cost. Once the inventory cost goes back to its normal level, our financing will also reduce accordingly.
Okay, so your financing will increase by 100 billion during this quarter.
Yes. It will not
Okay.
increase by 100 billion, increase as we need. We have received, the government has granted us a facility. They've given us a bank guarantee for 100 billion. We will not be drawing 100% of that amount, but we will draw as and when needed and how much is needed.
And the rate you are getting on this facility, is it as good as the one that you had on your previous facilities, or is this like more of KIBOR link?
It is KIBOR linked. All local borrowings are KIBOR.
Okay. Because the other financing that you have, it is around like 6 to 7%.
That's because of the foreign exchange 25 loan that we have, but that changes, status changes, depends on the foreign exchange reserves of the country. So we don't have a first right of refusal on that. We are just a recipient of it as and when the government needs us.
Okay. So regarding the LNG part, how many cargoes are you expecting during the next year, and what's the status of the contract right now after Qatar declared force majeure?
The contract stays, and the quantity of the cargoes will be dependent on the situation, the geopolitical situation. Qatar was also hit, so we will see how we are. I can't confirm at this one time what would be the quantity of cargoes, but we are looking into it. We are discussing with Qatar, and we'll keep the shareholders updated if there is a massive change.
This moves me to my last question, and thank you very much for answering all my questions patiently. There has been a talk of privatization of discos, and over time, you guys have mentioned that you've shown interest in some of them. So, will you be party to it?
I am not sure at the moment. Right now, we have not expressed our interest in the transaction. But if there is a good offer, we may consider, but there is nothing on ground at the moment. I can tell you that.
Okay. Thank you for your time.
Next person.
Saad Ali from Lucky Investments. Uh, I hope you can. I hope you can hear me.
I can. Loud and clear.
Ji, ji, ji. Thank you for the meeting. So my first question is around inventory. So what sort of inventory level are you maintaining right now in terms of number of days? I understand recent period has been quite volatile in terms of procurement and supplies. But are you maintaining the same kind of inventories of diesel and petrol as before the war started?
Indeed, yes, we are required to maintain a 20-day stock. To manage a minimum of 20-day stock, the inventory level sometimes increase to 22, 24 days, 25 days, depending on when the cargo is coming. So that is one of the things that we have. You also need to understand there is a lot of dead stock that is there. So if we include that dead stock, the inventory levels increase to around 30 to 32 days.
Can you elaborate a little bit on that dead stock you're talking about? Is it that
Which is
yeah,
required which is required in the pipeline, the stock which is required in the tanks, in the pipeline, which we cannot use willy-nilly.
okay, and that raises the inventory levels to how many days did you say?
30 to 32 days.
30 to 32 days. Okay. So diesel inventory any day, any given day would be, somewhere close to that, above 30 days. Is that right?
Yes. Yes. If you are
Okay.
looking at from the perspective of inventory valuation. Otherwise, our usable stock remains around 20 days. But of course, to manage this minimum 20 days, it sometimes increases too.
Sure. Understood. Acha, my next question is about LNG. I understand much of the LNG that comes through PSO is the contract with Qatar, and that contract is about for it's a 15-year contract. So what happens after that 15 years? I think that might last until 2030. So
Yes.
after that, would you uh, I mean discontinue the LNG business, or how what would happen?
If the
Anything?
country needs it, we will have new contracts with Qatar or anyone else who's giving us a good rate at that point in time. If the country does not need it, it is not my call to see whether I import LNG or not. It's a national product, and its usage is determined by the government of Pakistan. I am just the importer of LNG. So whatever is the need of for the country, the government determines, and we will provide that to the government.
Okay. So is PSO engaged with the government in terms of, is it requesting the government for an increase in the margin from 2.5%? I remember at the start of this contract, the PSO was requesting for something above 3%. So are you still in talks with the government, or is it something that you've given up on?
I, as CFO of PSO, am always in the talks to increase my profit. That's my job. And the government's job is to keep the prices as low as possible for the country's benefit. So, yes, there is always a discussion going on, but nothing is happening at the moment.
Okay, my last question is, is a follow-up on the circular debt plan that you mentioned earlier. Can you give a little details about that? This is likely to be the gas circular debt plan, which what kind of measures are we should we expect uh, in that plan? I mean, is it just going to be tariff increases, and or there will be sukuk issues, or um I don't know, maybe direct injections as well. So can you give some color on what that plan might look like?
The government is working with the consultants on various options at the moment. It has not been finalized, so I really can't give you the detail. They will make it public once it is done. There are what I'm happy about is the government is seriously taking this issue of circular debt, and they are working towards it. So I see the light at the end of the tunnel. Or how they settle it is on them. They have 3 or 4 options on the table. They're working with professional consultants on it, and they will prove a plan very shortly.
All right. Thank you. Thank you for your time.
Shankar.
All right, thank you. Thank you so much. So maybe I missed it earlier, but can you share the overdue receivables of the PSO for separately for the gas sector and power sector circulated?
I'm sorry, you're talking about the breakup, or what are you
Yes,
talking about?
yes. Breakup of both power sector and
Power sector,
circulated.
as I mentioned earlier, power sector, we don't have a big number of receivable from power. We have 68 billion receivable from Genco 3. And we have around 286 billion receivable from SNGPL. And the others are from directly from the government or different accounts of taxation and other such receivables. So this is the breakup.
No, but how much of this would be categorized into the power sector circular debt and how much of this is being categorized into the gas sector circular debt?
286 billion will be settled there. The other receivables are plan of for different are up for different plans which will be worked at.
Okay, and has the company received any amount under the power sector circular debt resolution? Because in the IMF report, which was published recently, the government has committed to IMF that by the end of June 2026, the unsettled amount will be settled for the power sector circular debt. So my question is whether you have received, are you expecting to receive by the end of this month?
We are not a part of that power sector circular debt. Let me be very clear. That is amount due to OGDC, Pakistan Petroleum, and other AP companies. We are not a part of that. However, I mentioned earlier, maybe you joined later, that we will be receiving approximately around 10 billion on our 68 billion receivable, probably. We've been told that we'll be receiving some money.
Okay, my next question is right now our LNG contract is under force majeure. Can you confirm, does this mean temporary supply of RLNG from Qatar side? And this contract will resume once the Strait of Hormuz resumes.
That is the assumption that it will resume as soon as Qatar is able to supply to us. We have imported a few cargoes, I think 3 or 4 cargoes from of LNG from Qatar during this time, whenever it was possible. So Qatar very much stands by its commitment at the rates that they were agreed earlier, not at the current high cost, and they will remain available to us once the Strait of Hormuz is open.
Okay, my last question is on the Iran side. So probably once this resolution is achieved between the parties, there are chances that the restrictions on Iran might be lifted. So, because you already have a long-term contract with Kuwait on diesel, so are there any possibilities? Are you working to shift few of your diesel supplies or maybe petrol supplies from Gulf to Iran?
Time will tell, I don't know. We haven't worked on that issue at the moment.
Can you confirm what is the size of the smuggling in terms of diesel tons or maybe petrol that is coming
So
into
you want
pipe?
me to pick it up or what? No, I can't confirm. I don't have any idea.
All right, thank you.
Thank you.
We should take the written. Questions.
We have covered all the questions. I think even the questions that Mr. Sarmat was asking cover most of the questions that were sent to us earlier. Is there any specific questions that you want me to answer further?
Two questions. We received a few questions in the chat box. Most of them we have already answered. A couple of them which we have not discussed. One question was asked about the remaining price differential claim. It is 24 billion at the moment, and we are following it up with the OGRA and ministry to get this amount released as soon as possible. And the other question was about the amount of sales tax refunds. It is around 75 billion at the moment. All the remaining questions have already been answered.
Saad Ali from Lucky. I think you have already
ask the questions. Is there
Just sorry.
anything else?
Sorry, just one question. What is the total amount of FET borrowing that you have availed, and what is the total size of that facility that you can avail? Thank you.
That's a foreign exchange facility that you say?
Yes, the FE25. Yeah.
So we had a limit of 1.5 billion, which has now been reduced to 1.2 billion. At the moment, I think we are availing around $800 million. This is US dollars.
Thank you. Thanks a lot.
All right. Jawad Saab, would you like to say something to our shareholders? He's our new CEO. Jawad Chima is oil guru. He's been in the oil industry. So just over to you, Jawad Saab.
Thank you very much, and really appreciate the openness and transparency for discussion. We are very much clear that PSO has a national responsibility, but at the same time, it has to be a profitable business. And in the changing landscape, we are very much committed to making sure we maintain our market share, and at the same time, we build our business that not only supplies energy security to Pakistan, but is also a favorable investment opportunity for our shareholders. So looking forward to delivering that strategy over the next 3 years. Thank you, Gulzar.
Thank you. Samir.
Thank you all for joining us. Have a good day.
Have a good day. Thank you.